Good morning. Welcome to Fondi Online from IT Forum Rimini. Ryan Blute, Head of Product Management, PIMCO. Ryan, good morning.
Morning.
What are your perspectives during the next 11 months for credit markets?
Sure. So the credit markets, on the one hand, they benefit right now from being the segment of the market where balance sheets look the best. So if you think about government balance sheets, corporate balance sheets, and then individuals' balance sheets, corporate balance sheets are in very good shape. So from that perspective, the fundamentals are very strong. On the other hand, you have a quite uncertain economic backdrop that we're facing today, such that you have the Eurozone crisis continuing to unfold, which could lead to much weaker growth than you might expect, and that would certainly put pressure on corporate profits and on the performance of corporate bonds. On the other hand, you continue to have investors leaving equities and leaving money market funds and trying to find sources of yield and income through the corporate bond market. So the technicals are actually quite supportive of the corporate bond market. So it's an unusually uncertain time right now as a corporate investor or as an investor in any risky asset class. But the fundamentals certainly look strong in terms of the quality of companies' balance sheets today.
And what's your strategy for credit markets?
Sure. So PIMCO's strategy right now when we invest in credit is to try to lend money to companies which are growing faster than the overall economies in which they operate. And we like to find companies that are domiciled in countries that are growing quickly. So today we actually have a little bit of a focus more on US-based corporations, and we continue to have a focus on emerging market companies. And with respect to emerging market companies, the benefit, we think, of lending money to companies based in these economies is that these countries are growing very quickly. They're growing 4, 5, 6, or 7% per year. So the companies based in these countries are actually benefiting quite a bit from that. And in terms of their leverage and the amount of debt on these balance sheets, it's actually quite low when you compare that to your average American or European corporation.
And can you tell about the opportunities for the sector?
Yep. So the opportunities that we see within the credit markets require that you have a lot of flexibility in your portfolio. So as a credit investor, we think it makes the most sense to think globally and try to have the widest opportunity set possible. And that's because the markets are changing so quickly today that you want to be able to very quickly and tactically take advantage of new opportunities that unfold. So we recommend credit strategies which have the ability to incorporate a certain asset allocation or embedded advice, something like we do in our diversified income strategy, where right now we've shifted a little bit more towards safer investment grade bonds and also continue to focus more on emerging market bonds. And we've dialed down or reduced the risk a little bit in some of the high yield companies that we've invested in.
And if someone would like to choose your bet fund, what would you choose?
Okay.
Like your fund.
Okay. I mean, that's a good question. We have obviously a lot of funds to pick from. So when we think about the credit markets, what I think meets the backdrop that I just described best is the Diversified Income Fund. And this is PIMCO's broadest global credit fund, and it's a strategy where we can invest really without focusing too much in terms of a benchmark in what we think are the best opportunities between investment grade companies, high yield companies, and emerging market companies. And so it's got that embedded advice or that asset allocation toolkit within it, which we think makes it a very sensible option for an investor looking for broad exposure to the global credit markets.
Okay. Thank you very much.
Okay, thank you very much.